Corporate insiders are dumping stocks at record levels as President Trump prepares to attack Iran early this week. In today's video, we'll be talking about this, going over the most recent Bitcoin price action, and of course, discussing how this can impact the overall crypto market. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. First and foremost, the data does not lie. Corporate insiders are dumping their stocks. 1,000+ executives at US listed companies have sold shares in January compared to just 207 buyers. This pushes the ratio of insider sellers to buyers up to 4.8, which is actually the highest since February of 2021 and the second highest since 2020. And it completely makes sense. Insiders are increasingly concerned about escalating geopolitical tensions, valuations, and potentially unsustainable AI capital expenditures. Corporate insiders are securing historic gains. Now, I also mentioned President Trump's potential attack on Iran. An ex-CIA officer actually discussed that we may see the attack as early as Monday or Tuesday. Let's hear what he had to say.
I have a friend, former CIA officer, who was at the White House this morning talking to his friends, and he says that a decision has been made to attack Iran on Monday or Tuesday. The president yesterday gave the Iranians 10 days to accept our proposals for an end to their ballistic missile program, an end to their uranium enrichment program, an end to supporting groups in the Middle East like Hamas and Hezbollah and the Houthis. But he's done this before. Well, he'll give you 10 days, he'll give you 2 weeks, and then he'll just attack 2 days into it. He thinks that keeps people off balance. And so he said that there are battle lines, that the anti-war forces are J.D. Vance and Tulsi Gabbard. He said that the
That's it?
That's it. He said the pro-war people are led by Marco Rubio and include Pete Hegseth, and now the Joint Chiefs of Staff. And I stopped him on that point this morning, and I said, wait a minute. I said, during the Iraq War, at the start of the Iraq War, the most stridently anti-war component was the Joint Chiefs of Staff. They were always the last ones that wanted to attack, because they know what war is. And he said, but you forget, Trump has replaced all of the Joint Chiefs this year, in the past 12 months, which I had forgotten. Any of these four-star generals who, had worked their way up through the ranks, but had served under Biden, he fired all of them. All of them. And he promoted people that he knew would be politically loyal.
Do you think this is to distract from the current scandal?
Probably in part, yeah.
Absolutely crazy stuff. Now, if we take a look at the Bitcoin price action, you'll notice that we are dumping on this weekend. We're currently sitting at around $67,500. Now, structurally speaking, I have to be honest, this doesn't look that bad. What I mean by this is in the more immediate short term, it is indeed possible that we can see some movement to the upside, only to end up resorting lower. This is, of course, what I personally think based on my overall market analysis. And that reminds me, I am not a financial advisor. Please read the disclaimer in the description down below. I'm just a guy on the internet sharing all of his own personal thoughts and his overall market analysis. Now, if we take a look at the chart, if we don't lose this level, right at around $67,300, things look relatively okay for Bitcoin in the more immediate short term. I don't want to start seeing us get 4-hour closes below this level, but the key pivot here that you'll notice that we maintained as support is actually the value area low of this existing range. Ever since dropping below $60,000, Bitcoin has just been chopping around, but we are holding crucial support above the value area low. So, in the more immediate short term, what I think is likely is potential continuation here, only to go ahead and retrace after Bitcoin likely makes it above $70,000. That's what I think could be happening. Now, what I want you to understand is on the higher time frame, my analysis remains exactly the same. And that is that Bitcoin will likely be going lower this year. But don't trust me, take a look at the charts. If we take a look at the price action from, for example, 2022 in the previous cycle, it's looking very, very similar in terms of the bear market. First and foremost, Bitcoin had an aggressive drop from its all-time high. We had a nice move to the upside towards that bull market support band, which is exactly what happened this time around. An aggressive move to the downside, a nice move towards its bull market support band, only to go ahead and get rejected massively. Now, on this rejection, that's actually where I went ahead and shorted Bitcoin. You guys are probably tired of me talking about it, but I just thought I'd make you aware that this was one of the key reasons as to why I entered that trade. Now I'm looking for new opportunities in this market, and my next big trade will likely be another swing short in this market, even though in the more immediate short term, I am trying to play a couple of smaller longs for a relief rally. So if we take a look at this price action further, you'll notice that after we had this rejection, Bitcoin finally seems to be forming a little bit of a bottom here, or at least trying to. Now, this is the exact same thing that happened in the previous cycle, where we got rejected from the bull market support band, dropped lower, and then we had a massive wick to the downside, which allowed us to get a little bit of relief here. Now, what was that relief? If we take it from the low to the top of this wick, it was about a 27% rally for Bitcoin. What would that look like in today's price action? If we zoom into this wick and then we put a 27% rally, that could actually bring Bitcoin all the way up to the mid 70K zone, maybe even higher. So structurally speaking, so long as we don't lose our key levels in the more immediate short term, I still think that Bitcoin can get a little bit of relief. But we also have to pay attention to what happened afterwards, because ultimately we formed a range only to go ahead and continue lower into the lows of the bear market chopping around. If you've been watching me for a while, you know that I've constantly said that bottoms take time to form. And I don't think that the bear market bottom for this year will be established by a big wick to the downside, and then all of a sudden we're off to the races and Bitcoin is pumping massively into a new all-time high. Rather, I think that what's going to happen is similar to what has always happened. We take our time with forming a bear market base. And in my opinion, this will be a great zone for accumulation. That's at least what I will personally be doing. By the way, if you want to see how I am personally trading the crypto market every single day, when I enter my swing shorts, when I enter my swing longs, you do have the first link in my description down below. If you click this link and DM me the keyword CBM on Telegram, you'll be able to join my private group. The only requirement is that you've signed up with one of my affiliate exchange links and you start trading on there as you normally do. Now, Bluffin is my go-to exchange. You hear me talk about it every single video. I really do like them, and they have a fantastic bonus where you can get VIP 1 and up to 20% deposit bonus. So if you're interested in joining and seeing how I am personally trading the market on a day-by-day basis, you do have that first link in the description down below. And let's get right back to the charts. So bear market bottoms take time to form. If Bitcoin is to repeat what has always happened in previous bear markets, it's highly likely that we can go ahead and establish this range. Ideally, we do get the weekly close in a few hours from now above $68,300. That would look quite solid for a little bit of a move to the upside, only to go ahead and get rejected. That's currently what I am eyeing for Bitcoin. Now, where would be my target if we are to head lower, at least from a spot portfolio perspective? Well, from the high to where we are now, we've essentially dropped just over 52.5%. So if Bitcoin is to continue its current trajectory of diminishing upside but also diminishing drawdowns, we can come to expect a bear market low at least down 60%, which could put us all the way down to sub $50,000. Now, the reason why this level is quite interesting is because you'll notice that back in 2024, this is ultimately where Bitcoin had a massive weekly wick to the downside before continuing its trajectory to the upside. So this would be a very, very interesting level. But to be perfectly honest, it is very, very difficult to time bear market bottoms. And while I do expect this year to continue being a bear market, especially with what we've seen with the stock market, just chugging along around all-time highs, which I do think we can end up rolling over, well, the thing to consider here is that if you're interested in the asset class in the long term, it makes sense to DCA in on the way down. Now, dollar cost averaging on the way down is my personal strategy. What I would look to do is the moment that Bitcoin drops once more below $60,000, which I do think the probabilities favor again, I will start to slowly dollar cost average into Bitcoin. Now, I would only be using a small percentage of my cash position prepared to dollar cost average and add more and more as we head lower. So I hope you can now understand my overall strategy. In the more immediate short term, I'm simply looking to trade the market that's right in front of me, make as much profits as possible, and take those profits, stack them into Bitcoin near the bear market bottoms. Now, you know my base case in the more immediate short term. I do think Bitcoin can find its way back above $70,000, and then we'll have to assess how the price action develops there. But the higher time frame analysis still suggests that Bitcoin will likely move lower, and this is one of the reasons as well. The US economy experienced almost zero job growth in 2025. And if we take a look at Grok, this is indeed confirmed once more. Yes, it's real. According to the latest BLS revisions in February of 2026, US non-farm payrolls grew by only 181,000 in 2025, down from initial estimates of 584,000. This is the weakest non-recession year since 2003, averaging just around 15,000 jobs per month. This is crazy, and you need to be paying attention to this. So I hope you can understand my overall analysis here. We have a lot of geopolitical tensions. We have the US labor market not looking that hot. Some people would still suggest that inflation is looking relatively sticky. There are reasons for the market to head lower, not just from a technical perspective, but from an overall fundamental analysis. Now, I also want you to understand that Michael Saylor continues to buy Bitcoin. Now, I personally think that if this guy can, he should be holding some cash to go ahead and buy Bitcoin at lower levels, but we'll have to see how big his buy is in tomorrow's episode. Next thing I wanted to show you here, Trump also raised his new global tariff rate from 10% to 15%. Now, I had a quick segment covering on Friday evening how the US Supreme Court ruled Trump's tariffs illegal, and in retaliation, he came out and imposed 10% global tariffs. This has increased by another 5%. We do have some key events this week outside of all of this that we need to pay attention to. Of course, the market will be getting that reaction to Trump's 15% global tariffs. Let's see what happens to the stock market, because as I've said time and time again, while I do think that in the more immediate short term, perhaps we can see Bitcoin back above $70,000, and I do think that we can move lower. Moving lower after that initial relief could be found with the stock market losing its bull market support band. But it makes sense to never fade the stock market. This is starting to look toppy. If you're new to my channel, we've made this comparison before, where as the stock market dumped into these tariff capitulation lows, the price action is starting to look very, very similar. Choppy to the upside, no more aggressive all-time highs, but rather just hovering around the level until one day we have a break below the bull market support band, and naturally, this will not bode over well for crypto. I've said it time and time again. So, the next key event that you want to pay attention to is the February consumer confidence data on Tuesday. Then we have Nvidia's earnings. We need to really pay attention to this because Nvidia's earnings determine how the stock market will perform. Then we, of course, have the initial jobless claims data on Thursday, where I may be producing a live stream because this is absolutely crucial data to cover, along with the January PPI inflation data on Friday. A total of 11 Fed speaker events this week. We do have a busy week ahead. And that sums up today's quick video. A lot of geopolitical tensions, Bitcoin hovering around $67,000, and Trump may be preparing that attack on Iran as early as Monday or Tuesday, according to an ex-CIA officer. Now, we'll have to see if it actually plays out. I'm just bringing you the coverage every single day. If you enjoy the content, make sure to smash that like button and subscribe. As always, I have my bluffin leverage trading tutorial right here, and I'll see you in the next video.